All right, everyone, welcome to Crypto Wednesday. So, if you're new to this series, I'm planning on building and trading crypto as part of StatsEdge Pro. So, the idea is that we have swing trading and day trading and investment systems currently, and they're doing fantastic, and I have no complaints there. And I'm not stopping working on those or building more of them for any means. But I thought that the best use of my time might be going to the cryptocurrency markets and looking to see if there's any systematic edge I could pull from those. Because if there is, that should be very uncorrelated from what I normally do. And the whole idea that I want to trade is as many uncorrelated systems as I can. The reason for that is the more uncorrelated systems that you trade, generally speaking, the better and smoother your overall returns. So we're into the crypto side of things. We've already talked about where I'm getting the data from, why I'm really getting deep into it, what kind of the last flash crash told me, and potentially what I could do from there. And then now we are going to talk a little bit more about, we go in here. Now we're going to talk a little bit more about idea generation. So, a couple different ways to generate ideas. One is just content consumption. Just go and find people that you like on Substack. I really like, I'm a huge Substack fan now. Twitter, YouTube, whatever it is. Avoid anyone who's saying they're right 100% of the time or 80% of the time. And they have Lambos everywhere and all that kind of stuff. And just read some articles. The other is to kind of just look at price action and look at charts and apply different indicators to your charts, which is kind of what I've been doing here with this RSI, and just mess around with them. And not to say that you're looking for something that's 100% accurate and there's all kinds of money to be made from it or anything like that, but it's to give you an overall and overarching idea of something that you might want to test. And then from there, you start building out different ideas, you start building out different strategies, you start kind of pushing that envelope that comes from an idea. So one of the things that I've looked at is that here's Bitcoin, and I've looked at Ethereum and a handful of other coins, generally uptrending the same way the market is. However, very choppy uptrending, I've noticed, and a lot of periods of time that are, these big sell-offs that bounce right away. And we also saw this again on Friday right here, big sell-off that bounced right away, and over the weekend a big sell-off that bounced right away. And that made me start to think about, okay, let's start with mean reversion. Let's start with some sort of thing is in a nice trend and there's some mean reversion going on, and just test that and see how that ends up working. And it might be awesome, it might be crap. That's what I'll talk about in the next one. I'll actually go through some of the code that I've built before I refine the strategy. But what we're looking at here is a short-term RSI and a 2-period RSI. And this is a famous kind of Larry Williams strategy that you guys can read about if you just Google 2-period RSI. So I applied that and I said, okay, let's just start taking a look. And let's just grab an area in which it's fulfilling what I want to fulfill, which is a strongish market, but with a lot of chop in it, and just start looking. So anytime you see red down here, that would have potentially triggered a buy signal. And you can see this one wouldn't have worked. This one would have worked nicely. This one would have worked nicely. This one here would have worked nicely. So you're starting to see this one wouldn't have worked. And this one would have worked nicely. And you just start going through the charts like this. And you don't really put any numbers in it. You're just kind of looking and saying, is this something that shows any kind of predictive value? Well, because of the nature of Bitcoin, it seems to. And then let's just kind of go back to a random part on the chart and try again. We're looking to see if this 2-period RSI gets us anywhere near a bottom of some moves. And when you're range bound like this, having a system that can make you any kind of money is fantastic. So we went in, we established what price action looked like. And with crypto, it is higher, but not evenly higher, not nicely higher, very, very choppily higher. So then you start going through your repertoire of indicators and you start to say, what is an indicator that shows me when things are potentially overdone to the downside? Because if I can take that and I can overlay it, which is what we'll talk about now, if I can overlay it with something that shows trending, maybe I can combine those two things. So if we just grab like an EMA, and again, these numbers don't really matter. We'll kind of figure all these out later, but let's say we grab an EMA and instead of a 9-period, let's, I don't know, make it a 50-period or something like that. 50-period EMA. So now we're just saying, okay, we want to be above this 50-period EMA, and we would have bought that one. We probably would have missed this one now. We would have taken that one. That would have worked great. We would have missed a bunch through here. and we'd still be out. And then we can just start going and looking and saying, well, that one would have worked well and that one wouldn't have, but that doesn't seem to add much benefit from just this area. And this is how we kind of start just toying around. This is not even, I want to say very sternly, this is not scientific. This is not the way that we actually test things in the real world. But what I'm looking to do is, because I have to generate some ideas, I'm just going to start going through charts and going through indicators. And if I find something that looks even remotely okay, well, that's a starting point. So now I can go to my backtesting system and I can say, here is a 2-period RSI. And I've built this thing that I showed, I think, in the last one. And this is kind of a decent little start. And the idea here is very, very simple for crypto here. I'm not going to go through everything right off the bat, but here we are for the system. The idea is that we want a 2-period RSI to be oversold, where we want a longer term period RSI not to be oversold. So to say, okay, let's just take a look at what happens if we are in a long-term uptrend, but we start buying short-term oversold conditions. And looks pretty good, right? Doesn't look amazing, but this is something that I would potentially trade if you combine this with a whole bunch of other systems that end up smoothing out the returns. But just looking at this, you're 21% year over year growth with a 23% max drawdown across 1,000 trades. You're right roughly 60% of the time, and you make a little bit more when you're right than you lose when you're wrong. Great statistics overall. So when I look at this, I say, well, that's a pretty good starting place. And that just came from looking at the nature of price action. Now, the big thing that I want to look at and I want to focus on is, now we need to go back to the chart and just say, okay, well, how can I sit out some of these the more disastrous periods? So what I would end up doing, the next step to this, is taking this price chart right here and lining it up, and you could do so in the system itself, and lining it up with this chart and trying to see, is there areas in which this system looks amazing? Is there areas in which this system doesn't? And start to learn from the price action like that. I got lucky just by taking kind of a random trade that kind of looked cool and then going from there. But this is the process that I wanted to show everyone. It's just generate ideas, however you do it, right? Read my stuff, watch, the things I do technical analysis on. You go to Substack, read a whole bunch of other people's stuff, start going down that list. And the more you consume content and read and filter your universe into people that kind of make sense as to you as traders, then the better off you will do over in the long run, because you're just kind of letting information and letting ideas hit you all the time. And then I have a notepad. So I just have on my phone a simple notepad that I have called Crypto Systems, and I just start writing. So if I'm in a shower, if I'm out for a walk, if I'm doing something with the kids or the dogs, and I just have that quick idea that says, oh, well, what about this? You start writing it down, you start recording those ideas, and then when you come back, you start testing. So in the next episode, we're going to really dive into this system. I'm going to play with a bit off camera here, and then I'm going to show you kind of what I've learned and what I've learned from the data. And that will be the next step. Is generate an idea, did a very rough test, looks okay. So now what can I learn from the data? How do I learn that from the data? And then if this strategy ends up looking good, then this will be, again, a beta part of StatsEdge Pro. So the idea between these systems is that if you're in StatsEdge Pro currently, you're going to get access to these systems as well. I will clearly denote them as beta tests, right? These are ones that I have no idea whether or not they work, because part of the process is building, testing, and then paper trading. And some of the people there just kind of like trading those along with me. So if you are at all interested in any part of this, make sure you come on over to StatsEdgeTrading.com. And until I see you crypto degens later, get away from the screens.